Hello and hello and welcome to Banking Innovation Summit. My name is Mark Johnston. I'm your host for the next 45 minutes. Now, this first session of today is fast track to the future of banking, staying ahead of the competition. Now, we've got some excellent speakers on our panel today. First of all, though, a note for you, our audience at home. We want to hear your thoughts. We want to hear your opinions. We want to get your questions. Pop them in the chat and we'll bring them into the discussion as we progress. Okay, let's move on and introduce our excellent speakers. I'm delighted to introduce to Banking Innovation Summit. We have Verena Thaler of Raisin. Hello, Verena. Would you like to give us a quick 30-second intro to who you are, please?
Hi, everyone. I'm delighted to be here. Yes, so I'm Verena. I'm Chief of Staff at Raisin. We are a deposit platform, a platform for deposits and investment products. And I'm leading our areas around strategy initiatives, transformation, and M&A activities.
Great. Thank you very much, Verena. Welcome to the show. And also, let's welcome Thea Loch of Lloyds Bank. Hello, Thea. Would you like to just give us a quick intro to you, please?
Hello, Thea Loch. I'm Head of Strategic Shaping at Lloyds Banking Group. Tend to focus on our technology strategy and how we're going to get to the bank of the future, which basically means introduction and use of new technologies mostly.
Thank you very much, Thea. Welcome. Jason Hurwitz, welcome to the show. A little bit of an intro from you, please.
Thank you. Yes, hello, Jason Hurwitz. I work for Aldermore Bank. We're a sort of large UK challenger bank. We have specialist mortgages, second-hand car finance, and a large SME funding business, which is where I sit. My role is looking at strategy, development, and initiatives, predominantly in the SME funding space.
Great, welcome, Jason. And finally, last but not least, Tuomas Toivonen of Holvi. Welcome to the show, Tuomas. Bit of an intro from you, please.
Hello, everyone. Yes, so Tuomas Toivonen is my name. I'm a co-founder and CEO of Holvi. And what we do at Holvi, we are a small business neobank focused on the German and Finnish market and live in 7 other markets as well.
Great, thank you very much. That was the easiest question our panelists will have today, I'm sure. Now we'll move on with the real questions for the discussion. So just a reminder to you, our audience, do put any questions you have in the chat and we'll try and bring them in as we can. Okay, first question, product diversification. How are banking business models changing? Verena, if we come to you to start with on that one, please.
Yeah, so what I see is that customers are getting more and more demanding, and that is also reflected in how the banking landscape is changing. It gets more tricky for banks, for challenger banks, for fintechs to really own the customer interface. And why is that? Because customers are more demanding to really get access to best-in-class product providers. So the days of the classic or traditional universal bank that had everything in its product shelves are really over as customers and consumers demand access to best-in-class products. And that is where I see that we are more moving towards a banking ecosystem where also the providers, banks, fintechs see their place in providing or specializing in that one category where they can make a difference.
Great, thank you very much for that, Verena. Jason, let's bring you in with that same question, please. How are banking business models changing from your perspective, please?
Thanks. Yeah, I'll pick up on Verena's comments there because I do agree. You know, there's a trend for greater choice in banking, which is obviously positive and exciting. But banking does need to find new ways to add real value to its customers, or they risk being demoted to a utility, and that has problems with long-term loyalty and, of course, sort of declining margins. So banks really need to identify where they're going to focus and then relentlessly pursue how to add tangible value to those segments rather than a lukewarm one-size-fits-all offering to a mass market. You know, margins are going to keep coming under pressure for sure, and that's the sort of the basics of economics. But so we've got to design sort of value-add propositions that are commercially sustainable for everyone in the value chain. It's sort of free for now offerings, I think, are a bit of a risk for a lot of people. That doesn't really sort of support long-term survival in what will always be turbulent markets. So there's quite a lot to do, and there's some in the lending space. You know, aside from digital technologies to sort of support remote operating and greater efficiency, there's a real need to sort of combine technology with human expertise within segments. So that's the real test, is how do we deploy technology to run efficiently, to provide fast service, seamless service, but how do we combine that with genuine expertise, authentic expertise that really sort of strikes a chord with the customer base and retains customers over the long term.
Great, thank you very much for that, Jason. Thea, should we get your perspective on that as well, please? How do you see banking business models changing?
Sure. So I think maybe slightly controversially, where we've seen the changes recently has tended to be in the experience layer rather than the product layer of banking. It's a lot of kind of core, what we have offered forever, being offered out in a different way with a different experience around it. But I think that's just the start. I think product diversification is coming, and you can see it in a small way with something like banking as a service. We have offered white labeled banking solutions for decades, but what you're seeing with, say, banking as a service is something which is far more split apart. It's offering new services such as identity. It's going out to being embedded in far more kind of end journeys, etc. So I think we'll see greater product innovation happening over the coming decades. It just hasn't happened yet.
Thank you very much for that, Thea. And Tuomas, your thoughts on that one as well, that question?
Well, one of the big trends that at least we see is very much the verticalization of banking services, where banks and fintechs are going closer to customers, solving real problems of customers. In the space that we work in small business banking, we see providers that provide banking services for doctors, or banking services for landlords, banking services for freelancers. So we very much see that the one-size-fits-all horizontal banking offering is not fit for purpose anymore, and you really need to bring things that kind of fit the customer's business, fit the customer's life. And along with that, and a little bit what Thea was saying, there's been a lot of innovation in the experience layer, and also on the manufacturing of banking products, in producing those products differently. But how this ties into the trend for going to see more vertical banking solutions is that you have the manufacturing layer with banking as a service, and then very specialized offerings for specific verticals. And this is a trend that we really see only accelerating.
Thank you very much for that, Tuomas. Verena, I think you have something to add from what you've heard from your fellow panelists, please. Your thoughts?
Yes, so I think Thea and Tuomas brought up some very good points when touching upon banking as a service. I think we actually did already see a change of innovation and how this has disrupted also the banking industry with a couple of the unicorns that we just saw in the last couple of months or years. So think about N26. Or Revolut, or so the offering that Starling Bank in the UK is currently preparing, staying with N26, they started out as a fintech. They didn't have their own banking license. They used banking as a service to get the bank started and going. And I mean, Starling Bank has also is also trying to establish itself as the banking as a service provider as well, to being a fintech on the one hand, but also enabling and empowering other fintechs and solutions to be brought to the market. So I think we have already arrived at a state where, from white label banking services, this has been now a little bit more exciting with dedicated banking as a service offerings, and really seen for many innovations, or for many fintechs that brought innovations to the market. And I agree with Thea, though, that we will see much more of that coming into the market. So I believe that innovation will be largely driven by those new entrants that leverage banking as a service as a first step into the market, rather than maybe the classical incumbents.
Great, thank you very much for that, Verena. Do keep your questions coming in. We've got a question here. Thea, perhaps I could give this one to you straight away. It's from Tony Mitchell. Her question is, how did you see COVID-19 impact or accelerate your change strategy? Thea, are you able to answer that at all?
Oh, I mean, it's had a massive impact, right? The move to digital in banking has just, I mean, that's accelerated far beyond where we had seen it taken us 10 years into the future. And actually, another thing in terms of operating model is being able to see ourselves work at the pace that we had to respond to COVID has, I think, given us a bit of a fire in our belly as to how fast we can go if we kind of put our minds to it and are heading onwards. So it's had both a massive impact, I guess, externally with how our customers behave with us, but also internally, it's given us a lot of confidence as to what we can do if we need to act fast and respond to something that's happened in the market. It was an incredible effort by an amazing number of colleagues to respond, I think, across the banking industry and all industries, but in particular with banking, because we had to respond to C bills and B bills in the UK. So it's been an incredible time too, and also whilst we're all moving to work from home, etc. So it's been quite an adventure, I think, for everyone.
Great, thank you very much for that, Thea. And Jason, do you have a perspective on that? I'll just repeat the question. How did you see COVID-19 impact or accelerate your change strategy?
Yeah, it was. I mean, I agree with Thea's points around it was incredible mobilization of resources within banks to adapt very, very quickly to an incredibly fast changing environment it was an overused word at the time, but an unprecedented amount of uncertainty about what happens next. Nobody had a reference point or a benchmark to consider against. So it was an interesting time. And whilst for sure, like most organizations, we accelerated our ability to transact remotely along with our partners, without repeating what Thea said, but instead to add in, I think it also reminded us that in times of real complexity, you need genuine expertise in your customer-facing operations in order to support customers through what is a very difficult and complex period. So for us, it was the combination of, yes, accelerating digital technologies, but also making sure we had the right people and the right expertise to help our customers when they needed us most. And that's when the human side of it was actually most needed.
Thank you very much for that, Jason. Do keep your questions coming in. I can see a few questions coming in. What we'll do is we'll go to this next question that we've got on the agenda, and then we'll come to a few more of those. So the next question we've got on our agenda is, what is the state of play between challengers and incumbents? Verena, maybe you could help me with that one straight away, please.
Yes, so in my opinion, the lines between challengers and incumbents will blur, as what I said before, as I believe and strongly believe that we will move towards a stronger ecosystem with challenger banks, but as well as incumbents focusing on where do they create value for the customer, and then we'll see more collaborations or partnerships, how to work together. So, for example, Raisin and Aldermore Bank, they are also collaborating. Aldermore is a clear specialist in SME and financing and providing financing solutions. Raisin, on the other hand, is a specialist in providing deposit funding. So it's it's a great match for us to work together to support one another in basically the product vertical or the product category that we believe we're both best in class players with. And that are needed vice versa to thrive in the market.
Thank you very much for that, Verena. Jason, did you want to add to that? Obviously, Verena just name-checked you a little bit with your bank. So do you want to add to that at all?
Of course, we are very happy with our partnership with Raisin, and it's very complimentary, but which is great. But I guess the more widely point around challengers and incumbents. I mean, commendably, the incumbent banks, and I mean this including Lloyds, have stepped forward enormously over the last 10 years in terms of the service proposition and are able to sort of deploy significant budgets to be able to tackle that. So things have moved along an enormous amount. I think for challenger banks and specialist banks, we are still in the minority. The clearing banks still have a dominance. We have the challenger specialist banks tend to compete more between themselves than with the clearing banks, predominantly due to sort of cost of borrowing. So I think some of our challenges are around how do we in the specialist and challenger bank space become a first point of call rather than a second point of call, because still many customers will walk into a big clearing bank that they've known since they were kids and ask for products and ask for support, whereas challenger and specialist banks still have to sort of scream and shout and lift their head above the parapet to get noticed. So that's a real challenge for us. But to Verena's point, there's a real openness to collaborate with complementary partners where we can work together to provide value in segments. So what we're looking at is where within a particular customer segment, how can we add the most amount of value so that we can be more specialist and add more tangible value to the customer base, so that they come to us and stay with us. And it's where partnerships like with Raisin can really make a difference.
Thank you very much for that, Jason. Thomas, do you have an opinion on that one as well? Competition versus collaboration. What is the state of play between challengers and incumbents? What do you think on that one?
Well, I mean, we of course have a long history of collaboration. The business or we've been in business for 10 years. The first 5 years we were a business-to-business neobanking pioneer. Then we spent 5 years as a subsidiary of BBVA, the large Spanish banking group, being the player that was opening new markets for BBVA, as well as exploring new business models, and in general working a little bit more agile than a large international bank can work. Now, since February this year, we've been a fully independent company, again, after our management buyout, but definitely have seen both sides of the aisle of being part of a large multinational bank, as well as being an independent company. I mean, there's pros and cons to both, and for us, of course, having been part of a larger bank allowed us to really mature the business in ways that we really maybe wouldn't have a standalone fintech done. So has really set a very good base for the base of our. So there definitely is a point to kind of working with larger companies, especially for fintechs in the growth stage. So absolutely.
Great, thank you very much for that, Thomas. I think we've got quite a few questions coming through on the chat now, so I'm going to just try and work my way through those questions with our panelists. So the first one I've got, which will be to, I guess, to everyone, is from Jack, which is: many of the speakers mentioned product innovation. What do they see as the key products that will be at the forefront of this change? Thea, should we come to you on that one first at all, please?
So I think you can see with product innovation, you can see it in like different areas where it's already coming out. So how cards are used, particularly kind of single-use debit cards, etc., is a product innovation that I'd expect to become more mainstream. You can see it with, insurance, with the likes of Lemonade, what they're doing. But I think actually the traditional current account has a lot of opportunity for innovation and personalization. So I'd hope to see more coming back actually into the core of banking for, how we can be more personalized to what people need and almost respond to what everyone else was saying about specific kind of responding to a doctor, for example, with exactly what they need. So that's what I'd go for.
Great, thank you very much for that, Thea. Jason, your thoughts on that one?
I think there's still a lot of the focus at the moment, to Thea's earlier point, is in the experience layer, and I think there's still an awful long way to go on that. It will feel like new product development because the experiences of transacting with those products will be materially different. So I think that may feel to average Joe, that might feel like a new product because the wrappers around things are going to be changing. Where I think there's some interesting development is in fast access to working capital. There's still the withdrawal of overdrafts from back in 2008 from all the major banks. That need for an overdraft still exists. That need for a comfort blanket, that need for quick access to funding still exists. And I still think there's a lot of space for innovation in how customers, both consumer and business, can access short-term funding very, very quickly. So I expect to see more movement in that.
Cool. Thank you very much for that, Jason. I think we've got another question here from Lauren Gonzalez. I'm going to give this to you, I think, Verena, if I can, to start with. So, why do you think legacy banks tend to be much slower in their adoption of digital practices? What do you think on that one?
So, well, the tricky question, the tricky part really is that if you have legacy, and even as a fintech with a couple of years sort of into the road, you already built up legacy. It's very difficult to introduce completely new systems, but you start to basically build around what is already there. And eventually this gets very static, and you try to work your way around this little Frankenstein that you have built eventually after probably a couple of years or decades. I think this is why we have seen such rapid change with fintechs or challenger banks or neobanks entering the market, because they have relied on banking as a service. So they never really built up a core banking system or legacy around the core banking system themselves, but rather used a modular stack of infrastructure. And if this is not fit for play, and especially with the very, very modern stacks where you only need to, you can mix and match. You can take identification and KYC services from one provider and maybe link it with the core banking core stack of another provider. And this gives you more agility. So I think there we'll see much more, but at the same time, for everybody who has already built up legacy, it's really hard to really modernize the complete infrastructure. So that remains the core challenge forward. And maybe if I just can quickly add on the question before, so where will we see product innovation? So from a consumer side, I see two areas where I expect a lot of product innovation. One is in what we call embedded or contextual finance. So it touches a little bit on what Thea said before. So we will see a lot more touch points where payments, for example, or instant credit, where we will see, or where consumers will see a lot more product innovation and access to products right on the spot, right at the point of sale. So also not new per se, but I think with big technology companies like Google, like Facebook, Amazon entering the banking space as well, we will see a lot more instant payment functionalities coming into the market. And the second really is in the investment space. Consumers want to get more access to wealth building and to also the increase in value that we have seen on the stock markets over the last 12 months, and have understood that they should also be part, or that the larger majority should be part of that wealth creation. And so I see a lot more demand for smart investment products, also including crypto.
Great, thank you very much for that, Verena. We've actually got a question on crypto, which we'll come to very shortly as well. A question for you, Tuomas, if I can, is Christos is fascinated with how challenger banks will turn innovation and formula into profitability, as none are appearing profitable as yet. Do you have an answer on that at all?
Well, of course, profitability is a challenge when you're growing really, really fast. And when we look at many of the neobanks, they definitely have been growing very fast. We as a company were not exactly profitable, but very, very close to break even. So it definitely can be done as a neobank. It just depends a lot on where do you focus. Whether you focus on maybe a little bit fewer customers, more valuable customers, providing good service for these customers, growing the value per customer, or whether you are focusing on super rapid growth in terms of purely customer numbers, thinking, okay, I'll monetize these somehow, some way, at some point. So of course, profitability is not even top of your mind in that game. And of course, we've seen all the recent fundraisings. Capital is easy to come by these days, and capital wants growth. So I would say that to a large extent, it is not whether you can be profitable, it is more where do you put your priorities, and that just hasn't been priority in the area of neobanks.
Thank you very much for that, Thomas. And Jason, let's come to you. Do you got a comment to make on that one as well, please?
Yeah, I wanted just to open up the question a little bit insofar as to say that, I think it was positioned as no challenger banks are profitable, and that's not quite right. I think there are quite a number of challenger banks, including Aldermore, that are focused on lending, where there is good and sustainable profits. And I think it's important for organizations not to shy away from the conversation of profitability. I think profitability, reasonable profitability, sustainable profitability, not excessive, is key to long-term sustainability of the financial ecosystem. There's that wonderful phrase from 2008 that when the tide goes out, you see who's not wearing any shorts. So if the equity markets retreat, then there are some players out there that are living off equity that are going to struggle fast. And I hope they find a way to move forward, because they're delivering some fantastic things. But I worry that there's not enough focus on moving to the black now. And I think it's okay. We shouldn't shy away from equitable value for everyone in the value chain. I think that's important for long-term survival of customers and the financial ecosystem.
Great, thank you very much for that, Jason. That phrase will definitely be being chopped out of there and put onto the on-demand clips for sure, which is great. I've got another question here, Thea. Maybe you could help us with from Zhao from Best Bank. He said, "We're currently talking about hyper-personalization, but our customers really want a unique or individual solutions. Can banks create such ecosystems that allow to build millions of solutions, one per customer?" You have any thoughts on that, Thea?
What a fantastic question. That's a question. I mean, that's the question, right? How far can we go into personalization? How much do people actually want us to go into personalization, and where do they want personalized solutions? I think that's something we need to grapple with, because to a certain extent we talk about this a lot, but let's say something like Amazon, that's not hyper personalized really. It is more personalized. It is referring to what we do, but do we really need hyper personalized solutions, or do we just need ones that fit what we do and don't feel like a one size fits all? So could we? I suspect that is quite a long way off to kind of literally population of one. Should we? I think is a different question, but certainly further than we do today is what I'd say.
Great, thank you very much for that, Thea. Let me just see. I think what we'll do is there's a couple more questions going on there, so we will come back to those questions. I'll just carry on with the agenda. One more question from this, and then we'll come back to a few more of these questions to our audience. Do keep them coming in, because we are working our way through them. So the next question is, how is emerging tech helping drive efficiencies and streamline processes? Jason, if we come to you with that one first, please.
Sure. I mean, digital investments in efficiencies are clearly not new. Organizations have been working on that for quite some time now. And with the sort of new breed of highly configurable cloud-based modular solutions, which I think Verena referred to earlier, banks are now in a sort of a strong position to not only implement the customer journey and the customer experience they want today, but to enable them to have a highly configurable platform that allows them to continually improve that, both for experience benefits and efficiency, and deliver that at pace and at a low cost. So, architecture these days is open, it's more nimble, and in many cases it's modular. And then one of the nice things about the modular platforms is it allows you to bring in a third-party component that delivers excellence within that component and build that into your value chain, rather than relying on a one-size-fits-all offering within your technology platform. Which means when the next excellent thing comes along down the road, you can swap pieces out and move a bit more nimbly. So it's quite an exciting time for banks in terms of technology.
Great, thank you very much for that, Jason. And Thea, let's come to you on that one as well. How is emerging tech helping drive efficiencies and streamline processes?
A while we're actually seeing some things properly hit the market, kind of mass market, in terms of automatic income verification for mortgages, or an exciting combination of biometrics, AI, in fraud. So we're seeing that kind of streamlining of processes. However, perhaps controversially, I might say we need to be careful about how we think about it. There is a risk that we streamline the processes of the kind of 18th century, or at least the 1980s, when doing it. With the new technology, we have this opportunity to rethink how we do banking. And so when we're looking at a process, we need to try and avoid just digitizing something that was set up for a different century or a different decade, and consider whether we can entirely rethink how we do it, a bit like some of actually the fintechs have. If you think about what Wise has done for international currency, it's just a totally different model, and so I think that's something to consider going forward. Let's not recreate the old in technology if there is a better way of doing it.
Thank you very much for that, Thea. If we just jump back into some of these questions, because there's still some coming through, which is great. So this question, Tuomas, maybe you could help us with this. Another Tuomas has asked, would banks go into servicing their clients with IT advice and provide support to leverage and use the technology to do banking? Do you see that as anything that might be offered?
Can you repeat the question?
Sure.
I didn't quite get the gist.
Sure. So the question is, would banks go into servicing their clients with their IT advice and provide support to leverage the use of technology to do banking?
Well, that's an interesting question, and that's not a service, at least we've seen so far. Banks provide their customers. Why not? Especially if I look at our customer segment of small business customers. Of course, a large majority of our customers are very digitally native service businesses, so they are quite competent in handling their IT needs themselves. But I can definitely see that for a maybe more traditional business that has not done their own digitalization yet, there could be a role for the bank to help them. But I would definitely see that mostly in the areas of adopting technology in small business, financial processes, that okay, as a bank I can bring a small business better ways to handle their accounts receivable, better ways for them to handle their accounts payable. So automating their business processes in areas where they might have not even thought about that, hey, I can actually do this more automated, use technology better. If that qualifies as helping customers digitalize, then maybe yes, banks can to a degree provide IT services to their customers.
Thank you very much for that, Tuomas. And Jason, do you have a perspective on that as well, please?
Yeah, I think there's been a lot of research into customer wants and needs over the last 10 years as we've built out that experience layer. And often there is an ecosystem of needs that we identify in our customer bases, whether consumer or business. But sometimes the question is missed, I think, where it's whether the need exists or not. Are they looking for their bank to meet that need? I know, do they want IT services from their bank, or do they want to go to an IT consultancy firm, professional outfit for IT services? And is that the best place to get the best advice? Of course it is. You know, we're banks. We should focus on where we can add the most value within our expertise, not trying to sort of do everything for everyone. I think that's not where the real value is we can add.
Thank you very much for that, Jason. Another question here we have from David, which is, how do you guys view crypto and new digital currencies? Now, Verena, I know you referenced crypto a little bit earlier on, or digital currencies earlier on. Could you answer that one at all? How do you guys view crypto and new digital currencies?
Yeah, happy to. I think so what we have seen over the last 12 months, or when the pandemic started, we have seen a huge dip in the market, and customers being more or consumers generally being more interested in building up wealth and how to invest into investment products. And with that, there came also a strong interest in cryptocurrencies. I personally believe that we will see much more crypto being part of an asset mix going forward, even for the mass market. We're not yet there. So I think at the moment, there is no provider that really provides access to cryptocurrencies in the mass market, but we have seen many providers trying to work and build out products to provide that kind of service. JP Morgan, for example, announced that they are currently building a crypto fund, I believe, to provide their affluent segments to and wealth segments to cryptocurrency products. At the same time, challenges in fintechs such as Trade Republic in Germany or Revolut have also included access to crypto products, at least on Bitcoin and Ether for most of the cases, to be accessible for the masses.
Great, thank you very much for that, Verena. Another question we've got here from Tony. If we could take this maybe to Thea, perhaps you'd be able to help us with this one. Do you perceive a real return to relationship banking, even if executed in a omni-channel way?
I would hope so. In terms, I think that if we move into digital, we have more options to provide. Some of the relationship banking that might go back to the 1950s as to what you could do, but via more less expensively, and so hence in a more personalised way. So I think it would be, and I think it's where do people need their banks and where do they want that relationship, and choosing the moments that matter to people and choosing that we will be there for them then, which tend to be at kind of key life moments, which is a real honour if you're a bank, right, to be there for people when they are at the key moments when they're buying their first house or they're getting married. So I think that's I think we'd like to see more of that. It's the balance between how you do that in a cost-effective way, so that we're providing value where people need us to provide value.
Great, thank you very much for that, Thea. There's another question here from Jovi. Jason, maybe you could help us with this. You may agree with it or not as I read it out. Jovi says, no one opens an account thinking, I want to receive notifications when I make a payment, or the KYC onboarding process is 2 minutes long, so I'll choose them. Why are banking products, both Neo and Legacy, continue to build products in that way? Jason, any thoughts on that one at all, please?
So the question is I'm not choosing a bank for those features, but I get them anyway. So I'm not sure I understand the premise of the question. It seems to be that the items mentioned as the experiences I'm having are not why I've chosen the bank. I think perhaps some of the experiences certainly will play into sort of the seamless experience of becoming a customer with that bank. There was a reference to KYC there. The customer there might not have felt there was much benefit in that process, but perhaps they might not have realised how complicated the KYC journey could have been without that technology. We've had, sometimes people say, "Oh, brilliant, no KYC." It's like, no, we've just done it seamlessly. So you haven't felt it, and so that's maybe the alternative wasn't clear. But when it comes to notifications and push messages with apps and services, I think they do need to be customizable. I think customers need the ability to opt in and opt out of what they want to hear about and what they don't want to hear about. And I'm sure as all organizations continue to invest in personalization and customer experience, so those things will become configurable by the user in time and probably in quite short order. So I'd imagine over the next 12 to 18 months that things like that will be controllable by the customer.
Excellent. Thank you so much for that, Jason. Hopefully that answered it for you, Jovi, as well. The next question we got on our agenda, if we switch back here then, is how important is brand loyalty in financial services? Thea, if we come to you first on that one, please.
Sure. So, I think it depends on the financial services that you're talking about. So those that have become, I think, more commodity based, it's less important. But for core banking, current accounts, etc., I think it's as important as ever. And I hope it continues to be that important, as important as to who holds your money and that you trust them. It's very much a trust relationship for who you have your main current account with. But then in other cases, you see some of the neobanks doing amazing things with their communities and with how they relate to their customers. That means that people really love them. And it's great to have those kind of love relationships coming back into financial services. And you can see that even when in something which is quite a commodity market, like where Lemonade is a much more loved brand. So I think there is room for that in whatever sector you're in, if you really engage with your customers in that way and are very human and personal in how you present yourself as a brand. And, you know, that's what we try to do. That's what a number of other fintechs try to do. And I think that's something that I love in financial services is, you know, brands with purpose, brands with a relationship.
Great, thank you very much for that, Thea. Thomas, that question to you as well, please. How important is brand loyalty in financial services?
I mean, brand loyalty is of course important in financial services as everywhere, but if we look at like the old world where you had your single bank and that's where you got your services, that's of course not there anymore. And you might have the bank that holds your money, holds your current account. So of course there is a very strong relationship there. But if we look at things like open banking, you can definitely have other brands, other service providers providing part of the mix of the services that you need. So you might have the relationship with the provider of course my money, but then how do I access my money might be a set of different brands that I select on a case-by-case basis to fulfill the specific needs that I have.
Great, thank you very much for that, Thomas. And Jason, your thoughts on that question, please?
Yeah, I think trust in banks is still an issue post 2008. Not for any reason, but it's just a hangover. I think banks are moved on an awful lot. An awful lot of banks, including where I am, didn't exist then. So it's slightly unfair. We weren't part of it, and nor were the customer retail offerings of the likes of Lloyds Bank part of it either. It was other parts of the bank that we don't need to go back into old stories, but I think the point is banks need to demonstrate their values at the times that matter and walk the talk now. And times like last year, and still to some extent now for a lot of businesses, a lot of customers, have been a really difficult time for banks. It's in those times where everyone goes out with a marketing message that says we're great, we care, in whatever language they choose. Everyone says that, but how do you cut through? How do you really get across to your customers that you are different and that you do care and you are there for them? And it's in those times of need, like last year, where you get a chance to do that, where you get a chance to provide payment flexibility to your customers during what was an incredibly uncertain time for everyone. But you focus on them, and that's where you earn your loyalty, and that's where you get your brand really standing up on what your values truly are. So I think it's about identifying those moments where customers need you the most and really hitting it out of the park when that happens.
Excellent. Thank you very much, Jason. We've only got like a couple of minutes now. So, sorry, let's come to you, Verena. We'll come to you very quickly on that one. Sorry.
Thank you. Yeah, I just thought sort of something that Jason just said struck me as you were talking about trust and that you need to show, or that the banking industry per se did not have a monopoly on trust, let's say. I think what adds complexity here as well is that even for banking and payment services, it's not just consumers, and this might be more in the retail sphere than in the SME and corporate sphere, but consumers also trust tech companies more and more, also for products and services that are related to banking and payments. So you have a quite tricky position to really position yourself as, why should a consumer put trust in your brand and in your bank? Because it's not just you're competing with other banks, you're also competing with completely new players in the market, such as tech companies.
Great, thank you very much for that, Verena. Now we're literally on time now, so I'm just going to say, I'm just going to ask this last question and ask for 30 seconds from each of our panelists on this one, if I can. The question is, what do financial institutions, large and small, need to do to survive in an increasing competitive market? Thomas, if we come to you first, 30 seconds from you on that one, please.
Because on the customer needs, that's where it starts and that's where it ends. And have great technology that you can actually rapidly meet the changing customer needs. So that's what I would say.
Thank you, Thomas. Thea, your thoughts on that one?
Yeah, it's back to the needs. It's being there for the moments that matter. But it's also, I think, for the likes of us, adapting and reinventing ourselves and moving our technology onwards such that we can meet those needs better in the future.
Thank you very much, Thea. Verena, your thoughts?
For me, it's brutally focusing on your value creation and where you really do the difference, or where your product makes the difference for somebody, and then specializing on it and developing this best in class or best in the market offer, and sticking to that, not getting too spread out and diversified with many initiatives, but not really focusing on the value creation lever.
Great, thank you very much, Verena. And finally, Jason, your thoughts on that?
Similar, but in different words. Never stop deepening your understanding of your customers and their needs. Customer-centric growth strategies are non-negotiable for long-term survival. Seamless technology, we need it. We've got to do it. We've got to build customer experiences that meet changing customer preferences. But complex needs and times of real concern, you've got to complement that technology with authentic human expertise. And it's the pair of the two that really drives long-term value.
Great, thank you very much. Thank you to all of our panelists. Thank you to Verena, to Thea, to Jason and Thomas. Thank you so much for joining us. Thank you for your time. Thank you to you, our audience. Thank you for some excellent questions. We got through a lot of them today, so I hope you enjoyed this session. We're back online at 11 o'clock. We've got how will variable recurring payments, VRPs, replace direct debits. We hope you can join us then. Thank you very much. This has been Banking Innovation Summit. Thank you.